Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another edition of the Extreme Speed Live Technical Analysis session as we take another fresh new look at the financial market. But before we begin the session, we shall run through our daily routine to confirm that we are all on the same page. And in that regard, I would like to know in the comment section if you can see my screen and hear my voice loud and clear without distortion by typing in hi in the comment section. So your highs will give me a positive feedback that we are good to go this morning. And thank you very much as you do so. All right. Okay, I can see a handful of comments in the comment section. Thank you very much. I see from Murdoch to Aki88 to Leonardo DV. Good morning, Carrie. I see IBO974. Thank you very much, Leonardo DV. Says not showing. Please, what do you mean by not showing? Is it the screen? Please let me know in the comment section. And is anyone in the house seeing a no-show screen? Please let me know in the comment section so that I can do the necessary adjustment. Things are quite fine right now, but if there are, let me know in the comment section. And while I wait, I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a technical dissection of the financial landscape using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. Well, it has been a beautiful 24 hours. We've done fairly well across the assets on our watch list. Remember, we have been monitoring four major financial assets, which includes the USOILSPOT, the USTech100, the USDJPY, and of course the XAUUSD. And we had some very interesting situation across these assets during the course of the last 24 hours. And most especially the USDJPY had gained a significant amount of traction. And I still have the opinion that the US dollar will continue to take advantage of the ultra loose monetary policy from the Bank of Japan to further escalate price to new highs. On the XAUUSD, we begin to gain some beautiful traction on that one. And then on the USTech100 and the USOILSPOT, we've had some choppy situation that is gradually building up into new possibilities. So we are going to be taking a technical look at this asset today, and I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining me for the first time, you're highly welcome. I'm bored. I'm so excited to have you around with us. And I know you will be wondering what this is all about. Well, as technical traders, we gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. This session kickstarts officially 11 a.m. West African time, 10 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the ideas we will be talking about today. My aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So as usual, we will be diving right into the business, and the usual expectation is to run through the economic calendar as we do want to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next move. So right here on the economic calendar, and based on the asset we have been monitoring since the beginning of the week, we do not have any high impactful events. So what I did here was to include the medium impact event so that we can at least have an idea into what catalyst participant will be looking forward to today. Now for today, Tuesday, January 16th, after including the medium impactful event, we have a couple of economic features from the United States, and one of them is the New York Empire State Manufacturing Index, which is it's a survey conducted by the Federal Reserve Bank of New York, and of course it gauges business conditions for New York manufacturers. Generally, a positive result indicates positivity expansion in that sector, while a low data insinuates a contraction in that sector. So looking at what we have here, considering what happened during the month of December, you will see that the previous data came in at a deficit of 14.5, and based on what is on ground right now, we have economists projecting a deficit of 5, which is a sign that we are expecting a little bit of expansion in that sector. Now, moving on, we have later in the day, we have a speech coming in from Christopher J. Waller, who is a member of the Board of Governors of the Federal Reserve System, and he is also he was formerly the Vice President and Director of Research at the Federal Reserve Bank of St. Louis prior to his appointment in the Fed board. So he's going to be having a speech today, and whatever he says will definitely be giving us an insight into what the monetary policy outlook of the Federal Reserve is, and of course the health situation of the U.S. economy. So we look forward to see what he's going to be saying today on that one, as it will give us a better trajectory on what interest rate cuts or hike is going to be for 2024. So with that being said here, and with the information we have gathered on the economic calendar, let's scale into the US oil spot chart. This is our first asset for the week. Let's run through this quickly. Give me a moment, please. Sorry for the break in transmission. I had to sort out some technical issues here, but I'm very glad that things are quite fine right now, and I hope they are as well on your own hand. So if you can hear me and can see my screen very clearly, please let me know in the comment section while I prepare for to begin all over again. All right, thank you very much. So, to start with today, we will be taking a technical dissection of the US All Spot. So, in the last 24 hours, we had a couple of scenarios here from both selling opportunities and buy potential in this particular market. And yesterday, I did mention how I sold at the breakdown of the $72.40 level before price action got taken out after the resumption of buy pressure in this particular market. And if you look at the structure closely during the Asian session, we did saw how after price action rose above the $72.40 level, we begin to notice some buy pressure around this particular area, and then giving us a situation where price action was confined within a range just right around the $72.80 and the $72.40 level to emphasize the level of indecision going on in this market. And when we see things like this, it more or less is a sign that something is going on behind the scenes, which we also need to take into consideration while we review this current market structure from a technical standpoint. Now, during the course of yesterday's stroke, the early hours of today, it was more of a bearish momentum despite the escalating tensions in the Middle East and Asia as the during the Asian session, of course, and oil prices attempted a modest recovery from recent losses during the Asian session, and right now we begin to see some traction in that regard. And I'm of the opinion that this little traction we're seeing right now may be as a result of the ongoing concerns in the energy market, which of course has persisted as Yemen's Houthi movement announces plan to broaden the scope of their targets in the Red Sea, potentially also impacting the US vessels too as well. Now, this announcement from the Yemen Houthi movement coincides with the heightened worries over Israel's offensive in Gaza Strip and an escalation in the Red Sea involving the Iran-backed Houthi rebels. Now, currently, the market is tending towards a bullish perspective at this point. But before I run through what things are looking like on the lower time frame, let's quickly run through the higher time frame so that we can have an holistic background into what is going on in this market. And for the sake of those who are joining us for the first time, you can be on the same page with us. Now, with the information we have, let's scale up into the daily time frame where we started our analysis for this week. Right here on the daily time frame, it was a simple setup we were able to spot here after considering the nature of price action in the last 4 to 5 months, and it was quite obvious that price action has been very bearish, forming consistent uniform lower highs and lower lows. And as a result of this observation, we connected a series of lower highs, giving us this beautiful descending trend line to work with. And whenever we have a descending trend line like this, it's our pattern to continue to look out for selling opportunities. However, despite the strong bearish momentum in the last 4 months, we saw something interesting happen during the first week of the month of December, as we saw how it had become difficult for sellers to break through that zone around the 68 and $69.50 area. And of course, we saw a repetition of this happen at the beginning of the year as price action formed a higher low to give us a sign that buyers may gradually be gaining momentum behind the scenes, as that area has now become a barrier for sellers to continue the momentum to the downside. Now, in addition to this observation, we saw a technical pattern on the chart which came in the form of a reversal pattern in the form of a double bottom structure, as we saw how the inability of sellers to break down the previous low might transition price action into a double bottom structure. And whenever we identify this kind of reversal patterns, we usually look out for the neckline, as we need to see price break out of the neckline to confirm that we now have a reversal pattern, a mature reversal pattern on the table to join an uptrend continuation. And like I said yesterday, one interesting thing about the neckline of that reversal pattern is that it also shares a beautiful confluence with that descending trend line we spotted earlier. Now, if price action will break out of the neckline of the reversal pattern, it would also have breached the descending trend line to emphasize the importance that buyers will be taking over the market from that moment on. So as it is right now, we continue to look out for opportunities, and in fact, if we can see a breakout of the neckline and the descending trend line, we feel very much comfortable and confident joining a bullish move from that area. Now, since the new week has begun, we had some situations unfold on the chart, and let's scale down to the 1 hour time frame to see how the market is building up ahead of a potential breakout of that neckline. Now, the first thing I did this morning while I was trying to dissect the current market structure was to affirm this descending trend line here. Of course, since the new week began, price has been finding lower highs. The week started on a bearish note, and we had a descending trend line to guide this price action movement since the beginning of the week. And as it is right now, this descending trend line has been broken to the upside following the buy pressure around the $72.40 level during the Asian session. And as it is right now, price has triggered our first buy stop order at the $73 area, and then we saw how price is climbing further to the upside, and if it will go ahead to break out of the $73.50 level, we shall be adding more buy positions to our existing trade. While we look out for more buying opportunities here, I want to emphasize that there is still a chance for price action to come back and retest the structure at any point in time. So the stop losses for the $73 area should fall somewhere right below the descending trend line to give enough breathing space for price action to move around in anticipation of the uptrend continuation. So as it is right now, I continue to maintain a bullish bias on this particular asset, looking out for more opportunities at the breakout of the $73.50 level. And if price continues to climb new highs, then we want to be seeing a breakout of the $75 level, which happens to be the neckline we identified on the daily time frame to further maximize the potential of this move. So On the US All Spot today, we continue to look out for buying opportunities as long as price remains above this descending trend line we identified here. So I encourage us all to mark out this trend line on our chart, as we will be needing it as a reference point to guide our independent trading decisions. Now, in as much as we want to maintain a bullish bias on this particular asset, we cannot ignore the potentials that sellers could still come in at any point in time, though I doubt this will happen. But if it does happen, we want to be on standby to capitalize on this move. Now, with the situation we have, what is it that we want to see on this chart that will make us feel comfortable changing our bias from bullish to bearish? Well, the first thing I want to see here, look at the lowest point price action has gotten to for this week, and that is the $71.40 level. Now look at this level here. As soon as price tested it, we saw buy pressure, and in fact, if we go to as far back as Thursday's trading session, we saw how that same level had continued to become a barrier for sellers. The same thing also happened on Wednesday. Fast rewind back to Tuesday as well, we saw how that same area had continued to be a barrier for sellers to push price to the downside. And as a result of this observation, I would like to see price take out that $71.40 level before I can consider selling this asset. So a breakdown retest could be a good opportunity to join the decline to the downside. Now, there is a caveat to the setup. After considering the distance between the descending trend line we identified here and that lowest point, which is roughly over 100 pips thereabout. Now, if price drops, am I going to wait for price to break down the 71.40 before selling? How can we actually maximize the potential of that bearish move if that is going to be the case today? Now, I would like to see price back below the descending trend line. If price can come back below the descending trend line, then we will be back within the seller's territory, and of course look out for patterns on our lower time frame that will confirm that sellers are gradually gaining momentum. Patterns like series of lower lows and lower highs on, let's say, the 10, 15 minutes or 5 minutes time frame to join a decline, then have a sell stop order below the $71.40 level. But if you are a very cautious trader and you really want to see significant confirmation, then I will just encourage you to exercise patience and wait for the breakdown retest of the $71.40 level before joining any bearish move here. But as it is right now, and considering the fact that price remains above this descending trend line, we maintain a bullish bias and looking out for more opportunities at the breakout of the $73 area to maximize the potential of this bullish move. So this is my simple view on the US All Spot for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Okay, so I see a couple of comments from 797, Nova 16, Sao Light 1, and Mac Sugar. Good morning to you guys. Glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. All right, so the next asset on our watch list for today is the USTech100, which actually the last 24 hours has done very, very well for us, scooping in a significant amount of profit after price action broke down that 16,800 level. And for those of us who capitalized on this move, well done and kudos to you for being on standby. Well, let's run through how the week began for us here, what really happened during the yesterday's live session, and what did we see that supported the idea of selling this particular asset. Well, the first thing we saw here yesterday was the fact that since last week Friday, price had consistently found higher lows, and as a result we had this temporary bullish trend line marked out. And one of the things we agreed here yesterday is that if price can maintain above that trend line, we will look out for patterns and structures that will support the idea of buying. Here, looking out for buying opportunities above the 16,870 and the 16,850. Now, in addition to this trend line, we also spotted a range where price action was confined within. For the first, I think, 18 hours of the week, we saw our price was confined within the 16,850 and the 16,800. And whenever we have a range like this, we usually exercise patience and of course position ourselves at either the resistance line or the support line of the range, looking out for the breakout or breakdown to give us an opportunity to either sell or buy. Now, of course, at no point since our live session yesterday did we see price come even close to the resistance line, let alone thinking about buying this asset, but instead price dropped into the support line, broke down the support line, and then incited our first sell position for the week. And since then, if you still have your sell position running right now, price is you currently be having a minimum of 95 to 97 pips in profit at this point in time, which is not a bad start to the week. And for those who capitalize on this opportunity, well done and kudos to you for being on standby to capture this momentum to the downside. And as it is right now, it is very, very important for us to move all stop losses, secure the current sell position right now, and the most appropriate area will be around the 16,750. Move all stop losses into that zone, and remember to move, give enough breathing space for price action to move around. Now, as it is right now, and with a well secured position at this juncture, what is going to be our next line of action for today? How are we going to continue selling this particular asset, or are there chances that buyers may come in at any point in time? Well, before we go into the details on the 1 hour time frame, let's quickly refresh our memories as to what we saw at the beginning of the week. So right here on the daily time frame, we did take into consideration the nature of price action in the last 4 to 5 months, and of course it was quite obvious that price action has been on a strong bullish momentum. And after connecting the series of higher lows, we had a couple of ascending trend line, but this one right here is the major one we wanted to be using for this week. Now, besides the trend line, we had a couple of levels, one of which is the most important one, and that is the 16,700 level. So we were looking out for price breaking out and retesting this 16,700 to inside buying opportunity, and if price can go on to break out of the 17,000 area, we will be adding more positions to our existing trade. So our center of focus on the USTech100 is that 16,700, which happens to be our key level for the week, and depending on how market participant reacts to that key level will determine if we are going to be buying or selling or adding more selling position to our existing trade. Now, as it is right now, price action is back into that key level, and if we scale down into the 4 hours time frame, let's see what things are looking like on the 4 hours time frame. Now price is right around the key level at the 16,700, and if you remember what I said here yesterday, that the continued selling pressure in this market after price action tested that high at the 16,970 persists, as we saw that since price tested that high during the last couple of days of last year, we see here that since the year began, price has been finding it difficult to even get close to that area, let alone breaking out of that structure. And since the beginning of this year, we have been seeing continued selling pressure around the 16,870. As you will see, every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And of course, you will see how that area also shares a confluence with our trend line, giving us a scenario where price is retesting the trend line in the attempt of pushing price maybe to the support line here, or even push it further to the downside. Now, looking at the structure that is since the beginning of this year, we are having something that looks more like a reversal pattern, something like this, where the key level at the 16,700 will be serving as the neckline of this reversal pattern. Now, if price can break down the structure, retest it, we'll definitely want to be adding more sell positions to our existing trade. So with this information here, it looks more reasonable that we continue to look out for selling opportunities and how to maximize the bearish momentum we capitalized on yesterday. And the only condition that will make us want to consider buying here is for price to break out, retest the 16,870, taking out all the sell positions within that area to incite an uptrend move. And that for me seems most appropriate to look out for buying opportunities. But as long as price remains below the 16,870, let's see if we will see a breakdown of the structure. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. Now, I would like to zoom into the current structure where our center of focus is going to be for today, which is the 16,700 level. So we have our key level right here, and we have been noticing some buy pressure around this particular area. Now remember, we've moved our stop losses on the current sell position, securing this current move while we continue to monitor and see how the market will react to the key level at the 16,700. Now if we see price breakdown, I would like to see some confirmations here before joining. Breakdown, retest of the 16,700, maybe on our lower time frame like the 5, 10 or 15 minutes time frame. We look out for more opportunities to sell this particular asset. So let me just put this right here. We look out for more selling opportunities below the 16,700. Now, considering the fact that price is around our key level, we cannot ignore the potentials that buyers could come in. As you will see, the last 3 hours have been characterized with a lot of buy pressure. And if we consider the breakdown of the support line of that range we identified at the beginning of the week, from a technical standpoint, there are chances that price may come back to retest the structure in anticipation of a downtrend continuation. And if this is going to be the case, we might likely see a reversal setup around this area, pushing price into this area. That's about 90 pips of price movement. So if we can see something like a double bottom structure or any form of reversal pattern here, a neckline will give us the privilege of capitalizing on this move, and we shall move our stop losses accordingly as soon as price tests that area around the 16,800. Now, if price gets into this area, we move our stop losses, secure the current buy position, and see if the market has an attempt, has the power or the momentum to break out of the 16,008. And if that happens, then we look out for more buying opportunities at a retest of structure and continue to look out for more buying opportunities if price continues to break out the 16,850 and the 16,870. But if the buyers find it difficult to break out of the structure and we continue to see selling pressure here, move your stop loss accordingly on the buy position, and we want to join the breakdown, retest of the neckline of a reversal pattern around that area, pushing price to the downside, and now we can now have a sell position below the 16,700 to maximize the bearish momentum to the downside. So this is my simple view on the USTech100 for today. So I encourage us all to mark out this level, and as it is right now, our center of focus is going to be around this area depending on what happens here. And like I said earlier, if we see a reversal pattern like a double bottom structure, head and shoulder pattern here, we mark out the neckline of this reversal pattern and buy the breakout retest of the neckline. But if price drops below the 16,700 and retest it, we want to be adding more sell positions to our existing trade. So let's see how the market will play out here, and we shall be back here tomorrow to review how well these assets have been doing. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off, see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. Okay. So the next asset on our watch list for today is the USDJPY. In fact, this is the most profitable asset on our watch list since the beginning of the week, as price continues to find new highs in this particular market. And in fact, at this point, we have a minimum of about 3 to 4 positions running in profit on this asset, and it's appropriate that we safeguard all active buy positions. If you still have any buy positions running, has the USDJPY confidently maintained positive ground above the 146.450 area we identified yesterday. Now, the PS upward momentum is fueled by the broader strength of the US dollar, especially taking advantage of the ultra loose monetary policy from the Bank of Japan. Now, earlier today, the data from the Japanese economic docket, that is from the Statistic Bureau of Japan, revealed a notable growth in the producer price index, showcasing a 0.3% month-on-month increase in December, surpassing the 0.2% in the month of November, and of course beating the estimated 0% that was projected earlier. On an annual basis, the PPI remained steady in December, maintaining the previous month 0.3% rise and surpassing the anticipated 0.3% fall. Now, the Bank of Japan Governor Kazuo Ueda emphasizes the crucial need to sustain the ultra loose monetary policy while awaiting additional data to gauge the persistence of inflation. It further went on to indicate that the central bank's commitment to abandon the negative rate when confident in achieving sustainable 2% inflation still remains on the table. That's a little bit of hope for those who intend to buy the Japanese yen. But at the moment, the ultra loose policy at this point, the ultra loose monetary policy is favoring the US dollar as it is right now. And for those of us who capitalize on this opportunity, let me run through how the week began for us all. We saw here how price was confined within a range at the beginning of the week that was between the 145.240 and the 144.870 area to emphasize the uncertainty that gripped the market during the early hours of the week. And of course, we saw price break out the structure prior to our live session yesterday, and I did mention that we may likely see price come back to retest the structure to incite another wave of bullish momentum, and if it happens, we want to be buying the retest of structure. But I also mentioned that if price does not come back to retest the structure and it continues to climb new high, then a breakout of the 144.550, we saw price come back to retest the structure, inciting more buying opportunities here. And of course, we did identify the 145.800 area where we said we will be adding more position. And of course, we also talked about the 146.450 to maximize the potential of this bullish move. And for those of us who were part of this profitable journey so far, well done and kudos to you for being on standby. Now, as it is right now, price has moved significantly well in our favor, and I will be suggesting that you move all your stop losses accordingly, securing this current buy position as we look out for new trading opportunities. And in an attempt to give enough breathing space for price action to move around, I suggest we move all stop losses to anywhere around the 146.200, giving enough breathing space in that regard. Now, with a well secured position and as we navigate the current landscape, what are our expectations for today? Are we going to continue buying this asset, or are we going to see situations where profit taking activities could come in to set tone for a sell-off in this market? Well, as it is right now, market participants eagerly anticipate today's US New York Empire State Manufacturing Index for potential market shifts. Additionally, insights into further monetary policy stance might be unveiled later in the day by the Federal Reserve's Christopher Wallace speech that we all looking forward to. Now, with all informations on hand, let's run through what things are looking like on the higher time frame so that we can have an holistic perspective into what is going on here. Now, on the daily time frame, what we did at the beginning of the week was to take into consideration the whole of last year's trading activity. And when we take a quick glance at this, you will see how it is very clear that price action has been very bullish. And to further emphasize this momentum, we connected a series of higher lows, giving us a beautiful ascending trend line to work with. Now, in addition to this trend line is our key level around the 144.800. I did mention that I had a little bit of indecision around this area as to which of the key levels will be most appropriate for us to use, but I later adopted the 144.800 since it's a little bit closer to price action in recent time. So we had this range here, and of course you know how we use our key levels in this community. When price breaks out our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And as it is, we wanted to see how the market reacted to the key level at the beginning of the week, and of course we saw breakout of the key level, retest of structure, and we saw this bullish momentum continue. So how far will this momentum go for this week before probably another wave of bearish momentum will happen? So as it is right now, price action on the 4 hours time frame has broken the 146.450, as you will see right now, and it appears that the strength is continuing. This area has been a strong selling niche for the last 4 to 5 weeks, and now with the final breakout, I think we will be having a new platform for new buying opportunities here. Now I want to mark out another area which we will be using to maximize the potential of this bullish move, and that is the 147.400. Yes, 147.400. So we want to mark out that level. So we have it marked out. So we look out for more opportunities if price goes on to break out of that structure, and if we have a breakout of this one too as well at the 148 point let's see, 148.200, we will be adding more positions to our existing trade. So I encourage us all to mark out this level, place your buy stop orders above the structures as the momentum appears to be getting stronger after breaking out of that supply niche at the 146.450. So as it is right now, I will continue to look out for more buying opportunities at this point. And for those who missed out on the recent breakout of the 146.450, I will suggest that let's see if the market will come back and retest the structure to incite another wave of bullish momentum. Now, a quick one here, please. I want to call your attention to this. We have an ascending trend line already in place after considering trading activity since last week Friday, and as long as price remains above this ascending trend line, we shall continue to hold on to this bullish bias. So that means that we could see a situation where price goes to retrace back into the structure to incite another wave of bullish momentum. Now, the only condition that will make us consider selling this asset is for price to break and breach down this ascending trend line, retest of that structure, then we could start considering selling this particular asset. But pending the time, that is, we maintain a bullish bias here, and the only condition that will make us sell is for price to drop below the ascending trend line. So best of luck on this bullish perspective, and let's see how the market will play out here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10 to 15 seconds off, see if there are any questions whatsoever before we move on to the next and of course last asset on our watch list for today. I see you, Dudu. I see you, Panoyo62. I see you, AAS. Good morning to you guys. And I see you, Ico07. Ico07 says, can you look at XAG, please? That's silver. Unfortunately, that's not on our watch list for this week. I usually mention this countless of times, that if you want us to look at an asset for the week, it is very appropriate that you drop them in the comment sections on Monday morning when we begin the new week. At that point, we have to look at things from an holistic standpoint and then follow through throughout the course of the week. So ICO07, I will encourage you to come in on Monday morning to drop any assets you want us to look at for the week. Okay, I do hope you understand this, and thank you very much as you do so. So in the absence of no further questions, I want to assume that we are all on the same page on these assets. So we shall be moving right into the next asset on our watch list. So The final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, as it is right now, we're currently enjoying a bearish momentum after price broke down the $2,043 area that we identified during the live session yesterday. And I do hope you took advantage of this move. If you did, you will currently be running with about a minimum of 120 pips on the first sell position. And remember, we talked about adding more position at the breakdown of the support line of the range we identified at the beginning of the week, dovetailing to about 54 pips in profit at this point in time. So we have roughly over 160 pips in profit with two sell positions running at this point in time. And for those of you who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And as it is right now, price has really moved significantly well, and I'm of the opinion that it is high time you moved all stop losses, securing the current position, and anywhere around the second entry at the 2046 seems most appropriate to move all stop losses to. So the worst case scenario will be a little bit of profit on the second position, and about how many pips of profit from the first position? About 70 pips of profit from the first position if price action takes us out of this trade. So with a well secured position at this juncture, what is going to be our plans for today? Well, like I said, all sell position was triggered. Secure all sell position as gold prices feel the weight of downward pressure amidst an improving US dollar, which is fueled by robust US Treasury bond yields. Now, investors' confidence in the US dollar is staging a comeback, fueled by hawkish remarks from Atlanta Federal Reserve President Raphael Bostic over the weekend. Bostic's suggestion of a potential inflation, using his own words, seesawing in the event of premature interest rate reduction, contributes to this resurgence in the greenback that we are seeing right now. Simultaneously, the geopolitical turmoil between Israel and Gaza has spilled into the Red Sea, with Iran-backed Houthi group persistently targeting maritime vessels despite recent US and United Kingdom military strikes. Now, this development may shift the market sentiment from positive to risk aversion, potentially increasing the demand for safe haven assets such as the gold. So at this point in time, I encourage everyone to safeguard all the current sell position, as we could see some buy pressure resume at any point in time. Now, let me quickly share with you why the need to secure position is very necessary here, and what are the things that we are looking out for. Personally, I still think that the current outlook on this market is still very bullish, and that the recent bearish momentum we're witnessing in the last 24 hours is more or less a potential a profit-taking activity, reflecting on the chart as a retracement move. Now, if you look at what things are looking like on the 4 hours time frame, you will get to understand what I mean here. Now, remember our outlook on the 4 hours time frame after considering the nature of price action since the mid-month of December. Now, price broke out of the $2015 zone, and since then we saw how this area had become a strong barrier for sellers, as every attempt by sellers to break through the structure has been met with strong resistance from buyers. And of course, this was followed by the continuous selling pressure that began the XAUUSD chart since the new year began. As you will see, consistent lower highs gave us a descending trend line to work with. And last week we saw how price broke out of both our key level at the 2035 and of course the descending trend line to incite a bullish signal. And from a technical standpoint, when price breaks out of a key structure such as this descending trend line and the key level at the 2035, we do expect that some point in time price may come back to retest the structure to incite another wave of bullish momentum. And one interesting thing about the retest of that descending trend line is the fact that it also shares a confluence with that demand zone we spotted between the 2015 and the $2025 area. Now, the right question going into the New York session today is, how far will this retracement phase go before another wave of bullish momentum will happen? Will the retracement culminate at the 2035 to incite another wave of bullish momentum? Or are we going to be seeing the $2035 level broken to the downside to retest the descending trend line that was broken on Friday to incite another wave of bullish momentum? So the question now is, how far will this bearish momentum go? So move your stop losses on all sell positions while we continue to monitor price action, and in fact we want to see how the market is going to react to this key level at the 2035 level for more insights into what our next line of action will be. Now, I just needed to show you what things are looking like on the higher time frame so that when we start deliberating on this current structure on the lower time frame, we will all be on the same page. Now, scaling down into the 1 hour time frame, let's look at what is going on here. Now, price action is gradually approaching the 2035 area, so we've moved our stop losses, remember, to the second entry point. Now let's see how far this is going to go. As soon as price gets into the 2035 area, move your stop losses further again to secure more sell position while we wait and see how the market is going to react to this key level at the 2035 level. Now, if price begins to find buy pressure around this area, resulting into a reversal setup, maybe double bottom structure, head and shoulder pattern, or even a falling wedge, then mark out the neckline. Then we will be buying the breakout retest of the neckline of that reversal pattern to join the second leg of the bullish momentum. However, excuse me, if price action goes on to break down the 2035 area and retest the structure, giving us signs that sellers are getting stronger, we look out to add more sell position. And of course, this descending trend line we identified on the higher time frame, which was broken on Friday, will be another area we shall be looking out to see how the market will react to that level. Now, to make things easy, I think we should be having somewhere around the 2022. Yes, 2022 seems most appropriate, and you will see the reason why that is in a moment. So let's mark out the 2022, sharing a beautiful confluence with that descending trend line, and of course could be serving as a platform for new buying opportunities. So look at what has been going on here. Look at this area, buying niche around this area. We saw something like this around here, and let's see if price breaks down our key level at the 2035. We shall want to see how the market react to that descending trend line, which shares a confluence with the 2022, to either add more sell position or get ready for another leg of bullish momentum. So if the momentum drops and we see buy pressure here, look out for reversal pattern, buy the breakout retest of the neckline to incite a new wave of bullish momentum. But if price breaks down both the 2022 and the trend line, a retest of structure will welcome buying opportunities in this market. So this is my simple view on the XAUUSD today. So we still maintain a bearish bias. Price continues to maintain that bearish perspective. The question at the point is, how far will this bearish momentum go before the next wave of bullish momentum will happen? Now, if price does not get into the $2035 area at all and it continues to climb new highs, let's see if we will see a reversal pattern here. If we see a reversal pattern, we buy the neckline breakout to join the momentum to the upside, while we will be using these levels as a yardstick to move our stop losses as we look out to see how the market will react to those levels. And if price breaks out a $2,058 area, I have a buy stop order above the structure to maximize the bullish move, and a further breakout of the $2,062.25 level will welcome more buy positions here. So let's see how this will play out. I wish you the best of luck on this one. I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. I will take the next 5 to 10 seconds to see if there are any questions before we round off on today's Extreme Speed live session. All right. So I see you're welcome, Ico07. Vlasios, good morning to you. In the absence of no questions more, I want to round off on today's session. It has been a beautiful day, wonderful moment with you guys as we take on 4 major assets today, including the USOILSPOT, the USTech100, USDJPY, and finally my favorite asset, the XAUUSD, all of which we were able to identify beautiful trading setups using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move, and of course use the data to also manage the current and existing positions we have. And I do hope we marked out those levels on our charts accordingly. If you do, well done. And all you just need to do is exercise patience and wait for the structures to mature before jumping into any positions. And I wish you all the best of luck on that one. Now remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding, you do want to be having a well-defined risk management strategy in place on your account for every trade you take, to mitigate against sudden pullbacks that may move against the expected direction, so that you can live to trade another day. And for those of you who joined us for today for the first time, I do hope you learned a couple of things during the course of the session. And if you did, you want to be part of the subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. And it's on this note I wish us all the best of luck today. I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. Do have a wonderful evening, everyone. Trade smart, trade consciously. Bye-bye.